Welcome, welcome, welcome. It is Friday. Happy Friday, and thank God it is. It is I, your host Q, coming to you from Nashville for another episode of Bitcoin Magazine Live. And I'm joined by my co-host P. How goes it, P?
As always, it goes fucking fantastically. Let's dive in.
Took less than 90 seconds, so YouTube will officially dox or ruin this video. It'll never see the light of day. You couldn't wait until this moment to say fuck. Come on, bro.
Oops.
I tease.
I don't care.
We got a tight episode. We're going to be popping over to Twitter in less than 30 minutes. We're going to be joined by the Bitcoin Magazine Pro duo of Dylan LeClaire and Sam Rule to go over the July monthly report. So hop on over there, Twitter, while we're done here. But we're going to get right into it with some news and notes. Who's got the first story? Is it me? It is me. It is I. Okay. This is a fun one. So I spent way more hours than I ever have studying bankruptcy over the last 12 hours-ish, 24 hours. Let me tell you, I understand less than what I did when I started. As many of you guys saw, the Celsius list of who is essentially owed money by Celsius has been released. It's an extensive document. I believe, and I'm pulling it up to confirm now, it is 6,000 pages long. No, I did not even read anywhere close to 100 of those pages. Most of it is just a list of names. There are 5 different categories in this, and there's 2 in particular I want to highlight. The first is the very last one, which tells you who owes money, and let me tell you, it's just Celsius. Celsius owes money. There's, unfortunately, Celsius Mining LLC, Celsius Network Limited, Celsius Networks Lending, Celsius US Holdings. Like, it's just Celsius that owes money. Shout out our boy Dylan LeClaire, who flagged this for us. But amongst the list of companies that include the likes of 1-800-Flowers, 1-800 Got Junk, Alaska Air, Air France, the state of Wyoming, the state of Alabama, Arizona Securities Division, a whole bunch of other just like truly remarkable, like Arlo Soho House. But the creme de la creme of this is the WEF somehow managed to get caught up in all of this. Now, mind you, I have no true clarity or understanding if they're directly owed money or if there are other damages, how they are involved. They show up in Exhibit A of total of 5 different exhibits, A through E. Specifically, Exhibit C are all the people who are owed money who are deemed confidential. Exhibit D, where it actually lists names of 355,000 different individuals who are owed money by Celsius. And Exhibit A, which is where you find the list of some of these businesses, that's where you'll find the likes of the WEF alongside Air France. So I thought that was funny. Play stupid games, get stupid results. What can I say?
So it's unclear, correct me if I'm wrong, it is unclear exactly how the World Economic Forum was involved, how much, all the specifics. Is that right?
Correct. I can tell you their address, which I find comical. But
oh God.
Yeah. It's remarkable. It actually, like, fine, you didn't put any money in, but the fact that the WEF now is caught up in this crossfire, to me, is what's significant. Less so than any financial gains or losses, but the fact that they were involved with a very centralized, quote unquote, Ponzi scheme, almost like they've been running the best Ponzi scheme on the block, and they were trying to maybe see how the next one up is doing.
That is quite a stretch, my friend. But I agree. Fuck the WEF. Like, I mean, oh God, they're so evil. They're so evil.
But like karma, I love this. I love that. Like,
come on, what?
Yeah, no, I agree with Q here. They were pushing these things. They're like, oh yeah, like get this staking coin, save the world with this meme coin. Like, come on.
Wait.
Like,
Wait. The WEF was doing that?
Yes, dude. You don't. I watched they're the only people aside from Dylan LeClaire that I have notifications on, and they're hilarious.
All right, so
okay, I clearly need to go.
Chris has now jumped up the internal. So we have an internal ranking at Bitcoin Magazine of who is the spook, and Chris just, in my opinion, now became the number 1 on this list of
dude,
who is the
spook. It's like better than reality television, dude. Having the notifications on. No, literally, dude. You never saw it's like women in Africa are like, this can save them by getting this NFT token. Like,
shut up.
Oh, I think I did see that one.
Okay, Q,
Yeah.
but you've never. This is why you need the notifications on from them. You know
Yeah,
what?
yeah. I
No.
did see that.
It's
I
the
was thinking
signal
about
from
it.
the noise.
I just,
live
it's just noise to me. It's like, oh yeah, they're saying some absolute garbage. But you're right. I do vaguely remember that. Oh
All
God.
right. Well,
All right, let's keep going.
we're moving on. All right, Elizabeth Warren to target bank crypto offerings in U.S. regulatory query. What this basically means is Senator Elizabeth Warren is asking the Office of the Comptroller of the Currency (OCC) to withdraw their crypto guidance for banks have relied on. Basically, what this is doing is there was a ruling made not too long ago that basically banks could start interacting with cryptocurrencies, whether backing stable coins and various different offerings. This is coming off of the heels of obviously BlackRock and Coinbase partnered yesterday. What she's trying to do, or she's trying to frame it as protection for investors, especially retail, but she deems that it's inappropriate for banks to basically be meddling in cryptocurrencies. I kind of agree in a weird way, but I also disagree. So what she's saying is like she's trying to protect retail, and she's saying they shouldn't be involved in crypto. I completely agree. They shouldn't be involved in crypto. It's Bitcoin and Bitcoin only. That's me,
Yeah,
not
but
financial advice.
I feel like, I mean, that's contorting yourself to agree with her. Like, obviously, she's not making that distinction.
Yeah, and then I will note her one little quote in there was cryptocurrencies are highly volatile assets that offer few, if any, protections to retail investors. So that's kind of like a broad lumping of crypto, Bitcoin, everything. Yeah, I think she's just trying to make it look like she's up for the good guy while at the same time, gladly taking banking money for financing.
Yeah, I mean, these people are terrified of Bitcoin because of its potential to actually peacefully wrest control of individuals and communities and other countries at every level of the aggregation spectrum away from these centralized entities, and that is very frightening for them. So they're trying to push whatever narratives they can in order to justify these things being bad, and a very effective one that really tugs on the heartstrings of people that identify as more liberal, more liberally minded is like, we've got to protect people from themselves. Like, you're too fucking stupid to figure out whether or not you should be doing a thing or not doing a thing. You shouldn't be held accountable for making that decision. It's the government's job to decide what is good and bad for you. And I think that's the screw that is being turned here. And in my opinion, it is absolute horseshit. Like, all you do when you remove the responsibility from people for that kind of stuff is, instead, not only do you not protect them, not only do you actually encourage them to expect to be, protected, which is much more dangerous because then there's no sense of responsibility. But what is actually happening, and is, I would say, more insidious, is that when you centralize these powers, you actually create systems where the people that are in control actually benefit the most. We've been talking a lot about how, Nancy Pelosi and everyone in Congress and the Senate, basically they do insider trading all the fucking time, and it's like nobody calls them accountable for it. And it's because they are very heavily incentivized to create systems that allow them to profit at the expense of everybody else. So when you put these things in place that are supposed to protect people, all that ends up happening is you end up excluding the people who have the potential to benefit the most, and you just do it under the guise of protecting them from themselves. So it's a double whammy. You're making people stupid and complacent, and you're also creating systems that allow the people that are already in power or their friends to benefit even more. It's fucked up.
So you're both 100% correct. Everything you have said, I wholeheartedly agree with. However, the conclusion you are drawing is incorrect. And here's why. Is there any 5 years ago, 6 years ago, was there any bank offering for Bitcoin or crypto offerings at all in general? No.
I mean,
no, there wasn't.
It's GBTC, but that's not, you can't actually own Bitcoin. Yeah.
Not in this vein, but GBTC came out in 2017. So fine. That was the first iteration of this. The point I'm trying to make is actually, this is a very good thing. It's a very good thing that it's going to be more difficult for banks to get involved in crypto and sell shit to their clients. And I say sell shit, not as a, like, I'm cursing, but in the literal sense of
human feces. Got it.
Like true feces, a feces-filled product that these banks want to just...
Like a feces-filled blockchain is what you're trying to say?
Honestly, I was going more for like, we're bearing witness to like the recreation of shitty subprime mortgage bonds, where like these banks will create...
back around. All right.
These banks are going to try to create these like, check out our crypto bond. It's 20% Bitcoin, 10% Ethereum, and 70% just a wall of shit. or whatever variation. I'm just throwing numbers and pulling it out of my ass.
I can
So
tell.
let's be perfectly fucking clear. Coinbase is still in business and still makes some money. So that tells me that there is still an appetite for people to gamble and take risks like that. And some of those people, I'm not going to throw out a percentage. It could be as small as 1%. It could be as large as 70% of these people genuinely think these are investment vehicles. Do not actually think that they're gambling. They may have convinced themselves that they are not. But then it's one thing if they're doing it on Coinbase. But if you were to go to, I don't know, your 401k portfolio and you see BlackRock has a crypto fund, well, you're going to think in your head, well, this person or these people, this business knows what they're doing. So I wanted some crypto exposure. BlackRock has it. Like, I know BlackRock, I have a different one of their funds. I might as well buy it. So actually, I really think this is a good thing because it will make it so much harder for these banks to go down that path. And it again incentivizes you to now have to go out and learn. And as you learn, if you actually do, I think, real thoughtful learning, not just reading about what the next celebrity is telling you to buy or shilling to you, you start to recognize what the real value proposition of Bitcoin is and why the rest of crypto followed suit. It forces you to recognize the importance of something like self-custody. And it forces you, I think, out of the traditional financial sort of thought process. So fine. You want to regulate banks from operating a crypto thing, Elizabeth Warren? Spend all your time on that. Spend all of your energy on that, please. I would rather her energy goes and focuses on this than her bullshit ESG stuff. So that's why I think everything you've said is right. I just want to take another angle and say, this is a good thing. This is a very good thing.
So to be clear,
I'm pro-regulation.
Oh, God damn.
Tell me what to do,
you
Daddy.
Piece of shit. Okay, wait. You're saying...
I'm not actually. I genuinely,
Okay.
I hate government regulation. I think the government has overstepped far too many times to tell us as individuals what we can and cannot discern as adequate risk for ourselves to measure. However, if we actually roll it back, they are not stopping us from investing in Bitcoin or crypto. You still could. You could yourself go.
No, I know. But I'm still just trying to understand the core of your argument. Are you saying that this is good because it creates like, there's an argument to be made that some people make that like Ethereum, and actually I don't necessarily disagree with it, that Ethereum, while being a piece of shit, actually provides significant cover for Bitcoin because regulators are focusing their energy on this other thing and the wall of shit that exists rather than deliberately attacking Bitcoin. Now, I think that's changing. But is that your argument? Is that what you're saying here?
No, my argument is that because it's now, there are more hurdles for the banks to get involved in this space. You're now disincentivizing banks from offering this product that I believe the product itself is foolish, stupid, and nobody should be going and buying these funds.
But there's not a specific thing that we're talking about. Also, there are already ways that people can do this in their accounts. I mean,
that's what you can do it as an individual. The point I'm making is there are going to be a lot of people who instead do not have the appetite to go and have a Coinbase wallet or go on Binance and buy Bitcoin or just any basket of cryptocurrencies to create now their own sort of crypto fund. And instead we'll see BlackRock has a quote unquote crypto fund that they have their own pool of whatever that they're investing in. And I can now expose myself to crypto through BlackRock. And the thought process with some very smooth brained investors in the retail space will be, oh, if BlackRock's doing it, they must know what they're doing. That's where I actually think this is good because it stops this bullshit belief of let someone else handle my money. And it actually reverts back to the idea of self-custody. Elizabeth Warren is not stopping you or I from going on Coinbase and aping into Bitcoin or anything else. She's just simply trying to make it more difficult for BlackRock.
I think that there's a lot of ifs and suppositions in your argument. And I think that anytime we invite this kind of regulation, it doesn't stop in here. It's like, fucking bridge tolls, right? Where it's like, oh yeah, this is a temporary bridge toll just to pay for the cost of the bridge. That shit never, ever goes away. I think it's the same thing. It's a constant encroachment on your rights. But let's move to that. I think we should move to the next story. We've been diving into this, tearing it apart. Chris, you got anything you wanna say on this?
Yeah, I guess. Do you want me to say the Visa Mastercard one?
No. I'm saying, yeah, fuck it. Let's go.
All right. We'll keep it going. This one's going to be quick. So, encroaching on your rights, the courts ruled yesterday that Visa and MasterCard have to cut payment services for advertising on Pornhub and its parent company, MindGeek. This is kind of like regulatory overreach. The regulation rules that they were facilitating child pornography. Visa and MasterCard and Pornhub have all come out and said that they do not allow that type of thing on their platform. This is kind of basically the government saying how you can spend your money. And I will caveat that, say, like, child pornography is horrible. People that do that should be obviously the law should go after them to the fullest extent of that. But they're claiming that not that they found it, but they're claiming that they're facilitating that. So they need to be cut off their payments to those companies.
Yeah, I mean, I won't pretend to know the specific details on the story, but the reason I think it's interesting is because it sounds like yet another example of intermediates who control aspects of the financial system imposing their own judgments on whether or not it is acceptable for a group of people to transact in money. And categorically, that is a bad thing. One of the most compelling things about Bitcoin, as I've said many times, is that it disintermediates the process of value transfer. And this to me is just yet another example of where that's happening. It very quickly becomes, there's a lot of like moral outrage around, sex workers and anything related to that, but it's a very, very short jump to other things that suddenly society views as unacceptable. And in times of, global tumult, that starts to happen, as we've seen in so many other countries, right? Ukraine was accepting Bitcoin donations, and then they announced like, hey, guess what? You can't take Bitcoin out of this country. Or no, was it that they said that, or you can't even buy Bitcoin if you were a citizen of the country because they were afraid people were going to take
Bitcoin.
it out. Yeah, exactly, right? And it's like
and
people
they already
just
had capital controls on the number of cash that you can take out as well. So yeah, exactly.
Yeah, and I'm not picking on Ukraine specifically. This happens all the fucking time. Capital controls get implemented in order to prevent people from doing things that are considered bad by people in power, and that should never be possible. We need systems that remove that power from centralized entities. Let's keep going.
Yep. The SEC is reportedly investigating every U.S. crypto exchange and also the largest crypto exchange in the world, Binance. Binance, for those wondering, I think there's Binance USA and then there's Binance like globally. So they're investigating all of like over 40 exchanges. A staffer from Senator Lummis's office said that every U.S. crypto exchange is in a various stage of being investigated by the SEC. This comes in the wake of the number of SEC actions asserting the regulators' domain over the crypto industry. This is causing a fight between mom and dad. What do I mean by this? There's the SEC, which is the Security and Exchange Commission, as well as the CFTC, which is the Commodities Trade Futures Commission. Did I get that right? I believe I did. CFTC. Basically, the CFTC is pushing back and saying that the SEC is overreaching in their regulations and they're trying to clamp down on the industry. The CFTC is claiming that they are the ones that should be the regulatory oversight for commodities more broadly, Bitcoin and cryptocurrency. Why am I saying this? Because show me the incentives and I will show you the outcome. The SEC wants more control and the CFTC wants more control. With the SEC doing more, the CFTC can't hire more people for their division within a government organization and vice versa with the SEC. So they're fighting over control of this asset class. Obviously, whoever does this, there's more money that flows from taxpayer dollars and or printed dollars into these two government agencies. So they're both trying to overreach. I don't think either one of them is better or worse. I think they're both bad personally. So I just think that this is government overreach is going to be government overreach. Whether it's over three-letter agency over here or three-letter agency over here, it's not a good thing. Anything you guys want to add to that? All right, P, I think you have the next story.
Yeah, hell yeah. All right, so we dunk on Ethereum all the time because, of course, it is a piece of shit. The narrative around Ethereum shifts constantly, and basically they're constantly trying to adapt it in order to get as many people in as possible. You have there was Ethereum, then they renamed that to Ethereum Classic. Then there's the current version of Ethereum. And now there's been all this noise around trying to release Ethereum 2.0. Now, Ethereum 2.0 is the version that basically is all focused on proof of stake, which is bullshit. And the hilarious part, the crux of this story is that because it removes all the incentives for miners to exist, miners and people that are heavily invested in that area are threatening to hard fork away from Ethereum 2.0 if it ever launches. Plot twist, it's never going to launch. It's a fucking disaster. But Justin Sun has come out very publicly and said that he is going to back an Ethereum hard fork. So basically, as soon as Ethereum 2.0 launches, if it ever does, then Justin Sun is going to put billions of dollars into the already billions that are going to come in from existing Ethereum miners to hard fork away and split everything up, which is going to be terrible for Ethereum. And it's just yet another example of how fucked up and broken the Ethereum network is. And I take a great deal of pleasure from it.
ETH 2.0 will never exist. That's my take. We will plan something fun for September 19th, although I do not know if that is a weekday or not. But we'll do something fun to dunk on them because that is the expected
CK's got
date.
a bet too. If by December 31st, 2022, it doesn't get enacted, he wins. Oh my gosh, what were the cubes? The random cubes? The tungsten cubes. He wins a tungsten cube from a guy he bet. So
have you ever touched one of those? Because I have not,
not.
But every single person I talked to is like, yeah, it sounded dumb. And then I touched it and my entire world changed.
By touching it?
Well, it's super dense. Tungsten is crazy dense. And so like you can get like a 2-inch by 2-inch cube and it's like heavier than anything you've ever experienced.
Pete, maybe you can equate it to the first time you touched your cold card. You're like, this tungsten cube, this cold card, same feeling.
I have to imagine.
Well, he lost his cold card last week.
Accident.
Yeah, in a boating accident. A seal jumped out, bit my hand off. This is the prosthetic hand, and it took the cold card with it.
Do you guys remember when the balance band came out? P, you were still old, but Chris and I were in high school when that happened.
No idea what you're talking about.
Yes, I do.
You know what I'm talking about, Chris.
I was like, balance band. I was like, oh, wait, yes. Yeah.
Like the thing that like everyone had one of those wristbands. It's like, oh, you have perfect
all the
balance.
Baseball players are like, yo, dude, like I hit better with this.
Dude, I truly yeah, no, that's what you sound like, P. Like
Next story, Q. Next story. Let's keep it rolling.
All right.
Wait, what? Sorry, what the fuck is a balance band?
We'll tell you when you're younger, which isn't going to happen. So.
All right, fine. I see how it is. Ageism.
If we got time,
in America today, you're seeing it.
This is our big story of the day. We got the non-farm payroll numbers that came in. These are important. Why? Well, because last week you heard Jerome Powell talking about how the economy looks good. Job reports are coming in positive. So long as they see that, the Fed feels comfortable tightening. Well, these job reports came in and surprised a lot of people. The headline numbers came in saying that non-farm payroll rose by 528,000 in July. That's a significant amount. That's far more than the expected. Shout out to our good friend of the show, Sam Callahan, who had an excellent Twitter thread where he broke down why these numbers are complete and utter horseshit. And I'm going to explain one methodology in particular. It's called the birth-death factor. Essentially what they do is they try to guess the number of jobs that are created by new businesses that are started at births. And the deaths are jobs that are lost because the companies went out of business. But how do they, come up with this estimate? Because are you getting it in real time? Of course not. As most government agencies and government numbers are, they're lagging indicators. They get their estimates for 2022 for the birth-death factor from the IRS and tax filings from 2021. Now, when we stop to think about this for a second, if we're using the economic reports that determine how many new businesses started and how many businesses shut down in 2021, in a year that had a lot of economic prosperity still, and then try to use those numbers to help us calculate what's going on in the midst of a market downturn, you're probably going to get some pretty skewed numbers in favor of making it look like the economy is still dandy because you're using numbers from last year, guys. And how many of these jobs from last year showed up on this year's job report. Shout out our boy Sam Callahan for calculating that out for us. 219,000 jobs are credited to the birth death factor out of the 528,000. That's more than 50% of these jobs that they said, oh, the non-farm payroll numbers look good. They're not good. If you actually take out the 219, I believe we come in under the 300. Yes, we do. We come in under the 309,000 expected. Oh, sorry, no. We're still just slightly above the expected number, but we're only about 80,000 jobs above the expected. Sorry, had a big loogie in my mouth for a second there. Look, this is classic government manipulating the numbers in favor of themselves. They continue to hammer this number down our throats, saying, hey, so long as the jobs reports come in positive, we can continue to tighten. We can send the economy cratering and make your life miserable. Don't just read the headlines, know what's going on, dive in deeper, take a look at Sam's thread to get a better understanding of what we're talking about here. But would love your guys' initial reactions to a falsified jobs report being sent out by the government.
Pete, you want me to go first, or you want me to go, or you to go? All right. I think that this is horrible because now they're like falsifying reports of jobs in order to keep raising rates. Now, what this really means is they are able to. They talk about demand destruction, meaning that as they raise rates, they destroy demand because they can't change the supply side. What that really means is they have a dual mandate of trying to keep inflation under control, which it's really high still. It's 9.1 or 9%. And then jobs right now is at 3% unemployment. So they want unemployment to go to 6% is what they're saying, or that's what they're targeting, 5 to 6%. What that means is millions of Americans will lose their jobs, is literally what they're saying. Hey, you have a job and things are getting more tight and your groceries are going up in terms of that. How about you lose your job? So the prices of those goods will come down, but now you can afford them at least. Oh, wait, you don't have an income, so you actually can't afford them. So when they say demand destruction, really what they mean is fucking over a bunch of Americans' lives, which is horrible when you think this is how the system is built. They want to have unemployment at 6%. They should have 0% unemployment. They're like, oh, but inflation's hot. Now we can allow unemployment. It's just so ass backwards. And it's pretty infuriating for them to lie about, look, we need to still keep raising rates in order to destroy more demand as they falsify more job reports. That's just kind of my first take on it.
No, I think you guys have nailed it. I mean, it's really sad to me whenever I interact with people that don't understand that the government is a machine that is designed to perpetuate itself. And there are microcosms, of course, all the different pieces of that machine that have specific incentives, and they're all trying to drive towards their own goals. But the economic numbers that are presented as fact by the government are so heavily manipulated, more even so than most other numbers and statistics that are produced. Shadow Stats is a great site to get a sense for how heavily manipulated these types of numbers are, but it's just bad news all around. I think it's important to call attention to these things because, as you said, Chris, this is going to profoundly fuck over a lot of people.
Yeah, I think that's a show there. Q, you want to wrap us up here?
Let's do it.
Yes, and I do want to remind everyone that tickets for Bitcoin Amsterdam are on sale right now. Use promo code BMLive to get 10% off of those tickets. Got to do it for the kids. We are the kids. Please, they won't feed us if you don't. And also feel free to hop on over to the Bitcoin Magazine store and get your copy of the print edition today. This is the best magazine we have ever put together. Very proud of our team for doing this. Hop on over, get your quarterly subscription, 10% off using promo code BMLive. Hop on over to the store as well, guys. That's a wrap on YouTube. We're going to pop on over to Twitter, so join us over there as we go over the Bitcoin Magazine Lives, or Bitcoin Magazine Pros monthly report for the month of July.
Remember to like and subscribe, guys. Thanks for listening to us. We'll catch you over on Twitter Spaces.
Have a great weekend. We'll see you soon.